Welcome to the Metals 100 coverage at the PDAC 2024 in Toronto, Canada. We have Lithium ION Energy with us here today. How are you doing, Ali?
Doing very well, Gilbert. Good to be here.
Yeah, good to see you again. So maybe you can just share with us a bit of your background for some of the new audience who hasn't followed you before already.
My name is Ali Haji, Chief Executive Officer and Director of ION Energy, a company that I co-founded in 2017 to look for lithium in Mongolia. We found our first asset in 2019, Bavayul, 81,000 hectares, 23 kilometers from the Chinese border. In 2020, we went public on the TSX Venture exchange here in Canada, and we started exploration immediately thereafter. We found grades of up to 1,502 ppm on Bavayul, and in 2021, we acquired Urgakh Naran, which is a 29,000 hectare closed basin salar in Dorngolvi province. Grades there were up to 918 milligrams per liter on surface. We've now done a geophysical survey on the asset, giving us a volume indication of 22.7 billion cubic meters, and grades in the hard rock or the host rock roughly 3 times higher than that of Albemarle Silver Peak in Nevada.
So let's talk about a couple of updates from your company. So one of the initiatives you've been working on, probably looking for a strategic alliance in your group. So how's that development coming along so far?
It's ongoing. I think strategics, of course, have the luxury of waiting in a market like we have today. Their pockets are deeper. Unfortunately for juniors, not so much the case. But lithium prices have also taken a bit of a tumble in the last year. We're trading at almost, I wouldn't say all-time lows, but we've now set a base of about $11,000 per ton, which is a good base to start up and bring more investment into the space. But until we start to see the spot prices increase in China, I think we're going to have a bit of a lull period. So they have the luxury of waiting. However, we do continue to work with them in order for them to come in at the asset level, not at the public company level, in order to free up liquidity and as well to help us advance our project to a state that would, of course, come close to production.
You also completed an acquisition of a Canadian asset, Bliss Lake Lithium project last year. Tell us more about what's the potential there.
So the thinking there was, we have a clay project, we have a brine project in Mongolia. The market in general was not very optimistic about Mongolia, which of course has changed now because we have a company by the name of Kumyang, a Korean group that will be in production in Mongolia, the first producing lithium mine in Mongolia at the end of this year. So Mongolia certainly has lithium. Sinomines looked at it for lithium. Kumyang will be producing at the end of this year. The Canadian assets were an acquisition done on the basis of adding a hard rock project to our portfolio. So with our clay project, our brine project, and now 2 hard rock projects in Canada, we've checked all 3 mediums of lithium. And the projects that we have here in Canada, of course, we will start exploration over the course of this summer on the back of a flow-through raise that we're contemplating in April.
So what's the overall planning for 2024 for your company? Are you looking for further financing later on?
2024, I think, is going to start off with a bit of work at Bliss Lake, which will be funded by a flow-through agreement or flow-through funding. And then we will look to do a strategic announcement, as I've stated previously, freeing up some capital at our asset level in Mongolia, and then ultimately acquiring either additional assets in Mongolia or spending a bit of time better understanding Bavayul and its vast potential given its proximity to the market in China.
Let's, in summary, comment a bit about the lithium price. Last year, lithium price have a major correction. What's your outlook there for this year? What's your thought?
Lithium, went down 80% last year, and year to date, it's down 20% already. But in the last 8 days or so, if you look at the Shanghai Metals Exchange, we have seen it in the green. So we're certainly on the path to recovery. The prices had come down so drastically as a result of the massive inventory in China. The spot contracts, of course, had a big part to play in that. But as that inventory gets drawn down and consumers start to consume more electric vehicles, we're going to start to see that price correct and sort of come up. I mean, you look at prices at $98,000 per ton, which is the peak of what it hit last year. The equivalent of a Mini Cooper would be unaffordable to most of us, given the price of lithium. So having it correct is great. It also fizzles out a lot of the companies that I think, in my view, were perhaps chasing that high price of lithium and not realistic about being a proper lithium explorer or producer. So the real companies that understand lithium, that have been around since the last cycle, such as ourselves in 2017, I think we have a shining example here to show that we can succeed, and the prices will start to, of course, mirror consumption as it increases in demand.
Sure. So looking forward to a successful year for you.
Absolutely.
Thank you for your time, for sharing your update with us, Ali.
Thank you, Gilbert.
Thank you.